Hello everyone. In this video, we're gonna learn how to create a cash flow statement in the accounting. In the previous video, we have created journal entries, chart of account, ledger, trial balance, income statement, balance sheet. So if you are the new viewer into my video, there is a card on your top right of this video. Please hit that and watch the video first, in which I have explained all the steps how to create journal entries, chart of account, ledger, trial balance, income statement, and the balance sheet. And I am going to continue the same file, the same entries to develop this cash flow statement, right? So if you have already watched that, you are most welcome to continue this video. But if you have not watched that yet, please watch that video first to continue this video. So hit the subscribe button and bell icon, and you are most welcome to continue. In our previous video, we have developed complete accounting system till the balance sheet, starting from the chart of accounts, journal entries, ledger, trial balance, income statement, balance sheet. And please remember, this was the first year of our business because we had established our business by investing 1 million in cash on 1st Jan 2022, right? So now what I'm going to do, I'm going to create a cash flow statement. In order to create a cash flow statement, please remember few things. Cash flow statement is the third financial statement in the sequence. The first financial statement is income statement. The second financial statement is balance sheet. And third financial statement gonna be your cash flow statement. Cash flow statement cannot be created before income statement, and none of the financial statement can be created before trial balance. So make sure your trial balance is ready. Then you create income statement in which you calculate what is your net profit or net loss, and based on that complete your balance sheet. The income statement is always created for a specific period. So that's why we call it for the period 1st Jan to 31st March. Balance sheet is not created for a period. Balance sheet is created on a certain date. You can create it today, you can create it tomorrow. Tomorrow balance sheet will be different than today because we will be recording transaction in the middle. So we are creating at the end of our period. That's why we are calling it as on 30th March 2022. For cash flow statement, please also remember it is also created on a certain period. So we will also use this particular statement that says for the period 1st Jan 2022, right? So before we understand the cash flow statement further, let's create the format for the cash flow statement. And again, remember this thing that this is our first year of establishing the business, because when we create the cash flow statement, the first year will be different than the one will be created in our second year of the business. So I will, after creating the first year of business, I will also do some entries for the second period and show you how you're gonna update your income statement, balance sheet, and the cash flow statement for your second financial year of second period, you can call. So let me call it cash flow statement, right? So let me give it a heading. So I will merge this cell and call it the Excel Tours Limited. The second line I can call it as cash flow statement, and the third one can be your period for the period ended 31st March. You have March 2022. Or you can also copy this statement for the period 1st Jan 2022 to March 2020. So yeah, this would be more better so it remain consistent. You can also just select these, just get the format painter, just go here and apply here. We can see there are little differences, so let me just set it, and here I'm going to format painter and apply it here. Right, so we have applied these three. We can delete these two columns. Alright, and I can just select some area and apply the border, the thick border, right? Okay, there are basically three main elements of the cash flow statement. The first element and the major element of the cash flow statement is cash flow from operation. We also call it CFO, not Chief Financial Officer, but cash flow from operation. The second major type of the cash flow is cash flow from investing activities, and the third one is cash flow from financing activities, right? Cash flow always starts with whatever result you have got in your income statement, which is the net profit or the net loss. So I'm going to start my cash flow statement. So first thing we will say cash flow from operating activities, right? You can bold it, okay, apply italic, increases, or you can apply like this, operating activities. You can also underline, yeah. So here your cash flow is starting from net profit, right? So here your net profit gonna come, and I can link this with income statement, right? So this is the net profit that I have got, right? In net profit we add back if there are any non-cash expenses. Non-cash expenses. A very good example of non-cash expense is depreciation. Depreciation is the one against which you have charged your asset but you have not paid anything against it. There is nothing you have paid against this expense, so you can add back this amount into your net profit in your operating activities head. But right now there is no depreciation entry in our journal entry, so I am going to ignore it, right? Then the second thing which is important in the cash flow statement is changes in working capital. Now what is working capital? The working capital is equals current assets minus current liabilities, right? Current assets minus current liabilities. Please remember what happens when your asset increases. What happens when your asset increases? So asset increases whenever you acquire an assets, cash outflows. That means minus. And if assets decreases, then cash inflow addition. What is this? Understand this point. Whenever your asset increases, for example, you purchase an inventory, then of course you will pay a cash. We have to see what would be the impact on cash if asset increases. The cash will be negative, means you have to pay, the cash will go out from your pocket whenever you will acquire an assets. But whenever you will sold an assets, for example, you sold an inventory, there will be an inflow of cash in your pocket. That's mine, that's an addition. So if his asset is decreasing, that means I should add this. If my asset is increasing, then I should deduct it. Similarly, if liabilities increases, let's say you have taken a loan from someone, you have borrowed money from someone, then cash will come into your pocket. Cash will inflow in your pocket. That means the cash is adding, so you will do addition. But if liability decreases, right, then cash means you are settling your borrowing money. The whatever money you have borrowed, now you are settling it. That means the cash is going out from your pocket, so you will deduct from your cash. So cash outflows when liabilities decreases, so in that case you will minus the cash flow, right? So now I have to list down all the changes in working capital. Hope everything is clear here, right? So now I have to go back, right? Now I have to go back into my trial balance, and I have to see which are my working capital accounts, which are the current assets and the current liabilities, right? Please remember one more thing, that I have to take changes, not the final value. I have to take only changes. Changes means ending balance minus opening balance, then you will get the changes. But remember, as I told you in the beginning of this video and the previous video, that this is the establish of the business. This is the first year of our accounting. So that means the opening balance will be definitely zero for all the accounts. So if the ending balance is this and opening balance are zero, that means the final values are the same as the one we have right now, right? So let's say, let me filter out data and filter only the current assets and the current liabilities, right? So this is my current assets and current liabilities, and these are all the accounts that I have to take into account into my changes in working capital, right? I just copied here and I can call it changes in working capital. I'm making a bit detailed so you understand the every point which is important to prepare the cash flow statements. Now if I go and apply a lookup, right, and take this value, comma, I will go on the table array. The table array will be this one, right? Or I can take the full table. I will freeze this value by pressing F4, comma, the column is 1, 2, 3 and 4, comma and 0, and enter. So this is the value I have came. Please remember, if I come here, they are all assets. These assets has been increased. That means if I look at my cash flow statement with asset increase, I have to minus it, not add it, right? But in trial balance, the answer will be in a positive number because they are debit. So in order to minus them, I have to go here and I have to reverse this sign by doing a multiplication with -1. So now this is the negative value because the asset is increasing Here also the asset is increasing, here also the asset increasing, here also the asset increasing, and here the positive number will come because the trial balance is in negative because they are credit values and they are the liabilities, and when liabilities increases in Excel it comes as a negative, it's come as a credit. So when liability increases we have to add it. That's why we have reversed the sign with multiplication, and we can simply just cut them and move them here and call it changes in, let's say changes in, or I can just do a equal sign and call it changes like this, sorry, equal double quote changes in double quote close, and I can select this value and enter it. I can bring it down because this value is used for VLOOKUP. I can hide that, right, and just increase it, right? So changes in working capital, and I can indent them, right? And this value I can bring in the first column. In this one I can sum all of them and close the bracket, and this is basically the changes in working capital, net changes in working capital. So this is your net changes in working capital, right? Now I have to total them, right? Okay, remember one thing, we will not add this cash one, right? This we will copy everything, but we will not do this cash one. So let me unhide this column again and just remove this just remove this cash entry, right? Let me move them up, right? Also let me move them up. Apply a formatting again, right? So now the answer that has come is basically your cash flow from operating activities, right? Cash flow from activities, and you can just sum these two, or you can just do equal sum and take all the range and close the bracket. So this is the net cash flow from operating activities. We can further improve this by bring it to the one column back here, one column back, so they become in order, no border, and I can move them up, right? Here I can put a line on the top, in here I can put the line on the top, and again I can format it, right? So this is the one time you have to make it so it becomes very clear, right? The second part of the cash flow is cash flow from investing activity. So I can just go on the top and just copy and paste it here, and I can just rename it cash flow from investing activities, right? Please remember, whenever we invest, right, so they are already marked in this cash flow, we can simply say okay, they are in cash flow now, for example, just for our understanding, right? I am defiltering it. Okay, now please remember, whenever we invest in our business, we develop assets, right? And the major assets that we invest in can be our building, can be our shop, can be our machineries, can be our big equipments. There are many things in which we invest, and they are comes in the fixed assets. So if I go back here, I have to again see my balance sheet elements only, and I have to focus on the fixed assets. So during the year we do many things. During the year we purchase fixed assets. During the year we sold the obsolete fixed assets. Means something that you have depreciated enough, now you want to sold it in the market so you get the salvage value, and then you purchase a new equipment again. So let's say you purchase a computer and you operate that computer for the period of 5 years, and at the end of 5 years you sell it, you get some proceeds, and you can call it proceed from sale of computer, right? That is inflow of cash. The outflow is when you purchase a computer. So in investing activities there are two main elements. One is capital expenditure. Capital expenditures are basically the acquisition of assets. We can also call it acquisition of assets, right? So whenever there is an inflow of assets in your company, means the cash outflows, and cash outflows you will deduct it from the cash. Proceeds from sale of assets. So whenever you proceed, you sell out your existing, your old assets, you have cash inflows, and that you will add back in your cash flow, right? So there is an inflow of money in your pocket when you sell something, and there is an outflow of money from your pocket when you purchase something, right? So if I go into my trial balance again, look into my fixed assets account only. If I go and see what are my fixed assets, so I have only one fixed asset, which is a shop. I have purchased a shop for 100,000, right? The opening balance is again zero. Again we have to see the changes. We don't have to see the previous the final balance. We have to see. So in the start of the business we did not have any shop, but we have purchased the shop here. You can see we have purchased the shop here by cash. So going back, I have to report this into my investing activities now. So I can call it acquisition of shop, right? And I can call it, let's say, shop. Again same thing, I have brought it down. The value will become negative because the money is going out from my pocket, and this time I can just put it here because there is no multiple heads in the same head, right? And that's it. So this is the cash, net cash. We can call it even net also, net, and we can also call it net, right? So net cash flow from financing activities, sorry, investing activities. So net cash flow from investing activities is 100,000, right? So this is what the total we have purchased. So again I can take this value here, I can give a line on the top. We can also go one step back, right? Okay, so now we have reached to the net cash flow from operating activities, net cash flow from investing activities. The third and the final element of the cash flow is cash flow from financing activities. The word finance itself says that it involves about dealing with the money. There are two sources of financing, two main source of financing. There are two main sources of financing. One way of financing is that you invest in the business by financing the money through your pocket. Whenever you finance through your pocket, you bring your savings, you bring your own money to the business, we call it owner's equity. And whenever you purchase the asset, you invest in the business by arranging the money through loan, through borrowing. Let's say you went to the bank and you borrowed the money, that please give us the money so I can establish the business. You borrow the money, you take the debt. So that's is the second source of finance. There is only two way of arranging the money in the business. One is the owner's equity. It can be by issuance of the shares. If you are sole proprietor, you can invest everything through your own pocket. If you are partners, you can jointly invest in your business, right? Or you can go to the bank and you can take the loan or debt on the interest, right? So two ways of arranging the. So now in this section of the cash flow from financing activities, we will be discussing the cash flow management which are related to either equity or the debt. Equity will come from the equity section of the balance sheet. Please remember, everything here will mostly be coming through the balance sheet except the top line, which is the part of the income statement, but yet it's a part of equity as well, right? So you can either connect from the income statement or you can connect it directly from here as well, from your retained earning, right? But this is eventually connected through the income statement. So now understand this point again. Cash flow from financing activities only deals with owner's equity and the debt. Owner's equity comes from the equity section of the balance sheet, and the debt comes from majorly it comes from the fixed liability section of the balance sheet. So if I go here, I do not see any fixed liability here, right? Because I have not borrowed anything into my general entries, so it will not come, right? It will not come into the trial balance. So in trial balance you are not seeing anything that calls fixed liabilities, but yes, we do have a equity section, right? So this equity section, again, the changes in equity will be matter. Whatever was the opening balance and whatever is the closing balance will be reported. Whenever you invest in the business, the cash comes into the business. Let me type the situation. Whenever equity increases, that means the money is coming into the business. Equity increases, cash inflows. That means you will do the addition. And whenever equity decreases, let's say you have given the dividends to your client, to your shareholders, right? So whenever you give the bonuses, you give the, let's say you give the dividends, sorry. Whenever you give the dividends, your cash outflows. Or if you are sole proprietorship, whenever you do the drawings from the business, we call it drawing. When you take the money out from the business, we call it drawing in the accounting. So this is basically a minus or deduction, whatever you would like to call it, right? Similarly, if a debt increases, means you have taken a loan. So whenever you will take the loan, the money will come into your business and cash inflows, and that means you will do the addition in the cash flow. And whenever the debt decreases, for example, you are settling it back, right, then cash outflows, and that is the minus situation, right? So in my case, I can call it finance, or let me just put an account first. Just go on trial balance. So this is the equity account. Just copy it and paste it here. Again, we have to take the changes only. Remember one again and again. We have to take the changes only. Since this is the start of our business, I am taking direct values from here because the starting balance is 0. But if this is a second year of my business, I will take the difference of the opening and the closing balance. How I will do that, how we will do that, how we will take the difference, I will explain in my next video, where I will do more entries for the second period, right? And then I will take the changes into the cash flows. But in this video, I am explaining you how to prepare the cash flow statement for a newly established business, right? So again, we will bring this value here. Remember, whenever equity increases, we credit, and when we credit, the balance show as a credit here, and in Excel it show in a negative sign, right? We can show it as a credit through other ways, but I'm not going in that detail now. So I'm just reversing the sign, because whenever equity increases, we add the value. So we can go to finance by ways, or you can so issuance of shares to ways, whatever name you would like to give, right? So I would like to say investment or finance equity, let's call it equity investment by ways, right? Now we have the net value ready, which is the net cash flow from financing activities. And I just take that value, right? Now I can hide this column, right? Because this was just for my understanding purpose. Okay, I have to increase this value further because I will need more area here. Let me bring it again to the top. Okay, I just an adjustment, right? Let me increase a bit size. Okay, let make it all as a one size. Right click, column width, make it 20. No, it's a very big. Right click, column, make it, let's say 14. Yeah, it seems reasonable. Yeah, good, very good. So now here I have to, because I am taking the changes. Remember, if I come here again, I have taken this into a cash flow, and if I defilter out it, please remember most of the cash flow comes from the balance sheet. So let me just take the balance sheet here. See, I have taken everything. I have not just added the opening balance of the cash, because we are just taking the changes only. So we have taken the changes, we have not account for the cash balance here, because the purpose of the cash flow is to calculate the ending cash balance by accounting the changes in the accounts, right? So going back into the trial balance, now my last point for the cash flow is that I have to open the opening balance of the cash flow, which is, I will type here, opening balance of cash as on 1st Jan 2022, right? So what was the opening balance? Again, this was establishment of the business. There was no balance at the beginning, so the opening balance would be 0, right? So opening balance would be 0. Excuse me, right? So now if I sum every cash flows including the opening balance, it will give me the answer of ending cash flow that should be exactly the ending balance of this. If that doesn't match, it means I have not prepared my statement correctly. There is an error I have made. So let's see what happens. So ending balance of cash as on 30th March 2022. Okay, this is the final answer I'm going to calculate. Sum, and now I'm going to sum everything. Sorry, not this one. Okay, just this one. All three cash flows. And when I just sum it, the answer is exactly 6 lakh. 6 lakh, and here is a 6 lakh. So that means I have 100% correctly prepared my cash flow statements, right? I can now adjust the last this line to make it more beauty. I can just go here and just apply a double lining here, right? And just go on the view and unhide the grid lines to make it more beautiful, right? You can, if you would like to improve anything further, you can improve that too. Yes, there is a need that we should undo it and just double line this, not a whole line. Okay, now this is more better. Perfect, perfect, very much perfect. One thing I am just noticing that I can indent this net value just to make it more beautiful, because it's coming in a single line. Sorry, let me just correct it. Yes, and yes, right? So this is more better picture now. So if I just show you the whole picture, all right, let me zoom out for you, and you can see the complete cash flow statements prepared in a very good way, right? Full screen mode, yes. Now you can see a more better picture. So you can see we have created a fantastic cash flow statement by using our data in the trial balance, bringing that values into the cash flow statements, and eventually applying the changes into the respective heads, adding the opening balance of the cash, and our answer that came into the end was exactly same as what we had in our trial balance. So this, and before going, I want you to subscribe to this channel, because if you have not subscribed the channel yet, you are going to miss whatever coming in the next video that will elevate your accounting understanding into the very much next level, and then maybe you will be able to implement the accounting into other businesses as well. So the red button is right below to this video, and that is just a one thumb away from you, and the bell is also one thumb away from you. Hit that red button, that subscribe button, the bell icon to stay connected with me. My name is Oais. I'm your tutor, and I'm gonna see you in the next video. Thank you so much.